Will the Fed crush the markets today? We have a big meeting today. FOMC decision will be coming out. The markets largely expect a 25 basis point rate hike. And the real thing that the markets are going to be watching, investors will be watching, is the commentary from the Fed in terms of what they project for rate hikes in the future. Will they be talking about a potential pause in the future? Will they be talking about a potential rate hike back in September when they meet again? They do not meet in August. So there will be no rate hike in August, but what are they going to do in September? Will Jay Powell be hawkish? Will he be dovish? And what will the results be of that? So right now, the Dow futures are down a little bit ahead of the rate hike. We'll take a look at that in a second. And half of the people, economists, analysts, investment managers, Wall Street expect Powell to come out, do the rate hike and come out dovish and claim not victory, but inflation is coming down. We are experiencing disinflation, although a couple of things are starting to spike a little bit, largely due to summer travel demand, things like that. Oil's up, which is putting pressure on gas prices. Some commodities are up, especially with the grain situation in Ukraine, things like that. So we've got a little bit of a spike here or there, but that's not in the recent numbers. But they are aware of those things. The housing market, of course, is still unhealthy and house prices are up. But what the Fed looks at, or what the economists look at, and the data in the CPI is owner equivalent rent. And in some areas, the reports are that rents are down. In other areas, rents are still spiking. But overall, on the national average, rents are coming down a little bit, albeit from record levels over the last couple of years. So the Fed is seeing progress from a monetary policy standpoint. They know that the rate hikes are supposed to have lagging effects, so it takes a little time for it to trickle through the economy. The consumer has not slowed down. People are still spending like crazy. The markets are off to the races. Financial conditions have eased considerably. We haven't seen the financial conditions like this other than last August. And then that's when Fed Chair Powell came out in August at the Jackson Hole meeting and really talked down the markets. And we had that bottoming in August and that sell-off in August of last year after that conversation. So if Chair Powell comes out very dovish in his commentary saying we're seeing progress, we're going to analyze the data, we anticipate the need for more rate hikes, but we'll be open. It'll be a live meeting, meaning they'll make decisions on the spot there versus making them in advance, depending on data that comes in potentially before the meeting. We're going to get some economic data this week after the meeting with CPI and jobs and things like that. So we will have a better understanding. And if that, continues to come in on par, job market strong, inflation coming down, then the Fed is going to stay the course potentially with another rate hike. But the markets will largely shrug it off because the rate hikes have not trickled through the economy yet. The markets are ripping. The banks are still surviving, although we did have a quasi-bank failure yesterday with First Republic joint venturing with the Bank of California. First Republic, as you know, has been in trouble. Or not First Republic, PacWest. PacWest Bank has been in trouble since First Republic failed. SVB failed and got taken over. These two banks are merging before any failure and potential takeover, which is smart because that retains more value that way versus, being put into a distressed situation. So we did have Pacific West, PacWest, that is merging with the Bank of California. So there is still a little stress in the banking industry, but again, not at scale. Credit markets are still holding up. The yield curve is inverted like we haven't seen really ever. It's more inverted than I think it's ever been, which generally has been spot on for predicting recession, but we're not seeing signs of recession. The economy is still growing. Consumers are still spending. So the Fed has its job cut out for it. Now, if Powell comes out very, very hawkish, the markets might sell off a little bit after the rate hike and a hawkish commentary, but then it'll pick right back up because, again, the effects of the rate hikes have not really trickled through the markets. Financial conditions have eased considerably. So what they're doing is not, having an effect on financial conditions, which is the thing that would normally keep inflation higher, which it is. Inflation is still higher than the Fed's target, higher than most people would like, but the economy is absorbing it, the consumer is absorbing it, so the Fed is not super concerned. So let's jump in and take a look at the pre-market conditions right now. Futures are down just a little bit. NASDAQ down 0.38, S&P 0.18, the Dow down 0.15. And again, the markets will probably be down ahead of the Fed, just flat to down ahead of the Fed. Once the rate hike comes out, the markets will probably sell off a little bit, and then after the Fed's commentary or Powell's commentary, if he's dovish, soft on the market, saying that we're seeing some progress, more rate hikes may be necessary, but we are seeing progress, then that means, and if he says financial conditions have tightened, then that means that the markets will probably take off from there and continue towards previous all-time highs. We'll take a look at the charts in a second. If he comes out and says that we're not at, financial conditions have loosened, that we need more policy firming, if that statement is somewhere in there, then the markets will likely sell off quite a bit, and then potentially come back from that ahead of the September meeting based on economic data. So that's kind of what we're looking at there. Let's go ahead and jump into the charts, and we'll take a look at the Dow right here above that 786 level. So broke above it, back checked it, and continued on. Generally, that's a pattern of continuation. Once you break that 786 Fibonacci retracement level and find support, that means the markets have the all clear, the S&P as well. So all three indexes, including the SPY, are all above the 786 level. So you could potentially see a return and test of the all-time highs, especially if Powell comes out dovish. Then, we're not that far off right now in terms of distance to previous all-time highs. On the Dow is only 3.6% away. The NASDAQ at the moment is only, 7.5% away, and the S&P is at this point 5.3% away from previous all-time highs. So again, if the Fed comes out dovish, you could potentially see a retest over, through the rest of next couple of months to the previous all-time highs, and potentially put in some new all-time highs before the end of the year, and maybe even before the next Fed meeting, because you have, again, all of August before the Fed meets again. They will not be meeting in August. They'll be meeting in September. We will hear some Fed speakers come out and give their commentary and opinions. We're going to take a look at Bitcoin here, based on the data that comes out. So they'll give some guidance, and the markets will be able to price in whatever the Fed is planning to do, which is potentially another rate hike if things continue to stay strong, job market, things like that moving forward. You'll potentially see another 25 basis points in September. One school of camp says that the Fed won't hike anymore after this meeting. Another camp is saying maybe one or two more after this. And then there's Rick Rieder of BlackRock came out the other day and said he expects another 100 basis points, or was it either Rick Rieder or Larry Fink, one of them. I get them all mixed up, BlackRock, Blackstone, but was expecting another 100 basis points between now and potentially the end of the year. So this fall will be telling in terms of student loan repayments starting up again, consumers coming off of the summer vacation, getting those credit card bills in. We know that credit card debt is at all-time high. Savings is starting to get depleted. So, these things take time to trickle through the economy to see if there's any kind of a slowdown that would potentially happen this fall with back to school, getting ready for the holidays, things like that. So earnings, of course, this has been a big week for earnings, and it's been mixed. Some companies hitting, some missing. Big tech, a little bit across the board, kind of up and down with earnings and things like that. So as long as earnings are strong, as long as consumers are spending and the economy is growing, the markets are going to continue. And the Fed will not be cutting rates in light of those events. The Fed is only going to cut rates if something happens to the economy and the markets. And then once that happens, generally recession will follow, markets will bottom, and you can continue on for there. So right now, Bitcoin continuing to climb this uptrend right here, working its way back to a back check. And depending on when and where that happens, if it happens, could be in the 27.8 range, 27.9, 28,000, depends on how long this takes to get there. And we have two major trends. We're watching the macro trend going all the way back to 2021, the support level at the bottom of July 2021 before the second peak, right here in May of 2022. So that line just kind of continuing around where you're finding some support on it, became resistance, popped up above it. So a check of that level where these intersect comes in right around 27,000. And then, of course, you have this level here of resistance across this range and support right here at that 24.8 level, 25,000, 24.8 level. So those are your big areas to be watching for Bitcoin. XRP, let's take a look at that. XRP continuing to kind of consolidate in this range like we've been watching in that right now 67 to 85-cent range, although it hasn't revisited that. It's more tighter in that 67 really to 70-cent range right now. So again, watching the court case potential for appeal. If the SEC appeals, this will likely probably come back down and test this lower level of the trend line again. Crypto space will get a little bit bearish. You'll probably see people taking profits. And of course, everything's in that same trend line, upward trend right now of consolidation, waiting for ETFs, waiting for a potential appeal by the SEC in the Ripple case with XRP. So these are the things I'm looking at. We'll see you on the next video.